And when you have the second biggest and third biggest government bond markets looking shaky like this, it's very worrying for all the rest, even for U.S. Treasuries. Monday, December 8th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, we're going to look at the bond market. Yes, the Japanese bond market is in trouble, the JGBs, but we also have another major bond market. It's probably the third biggest in the world. Yes, the German bond market is showing signs of trouble, of cracking. And that's very surprising because the Germans have always been relatively frugal. But unfortunately, since 2020, that's changed. And I have to thank the Nome of Zurich for giving me a heads up on the German government bond market. Well, it's a market I used to trade regularly as a futures and options broker. But as of the last few years, it's been pretty quiet, not showing any signs of trouble. So that's what we're going to look at today. Before we do, just look at some of the headlines that are quite surprising, actually. One of them is that China's trade surplus tops $1 trillion for the first time. It says exports soared despite tensions between Washington and Beijing. So I'm not going to go through the story, but it just goes to show how much of a challenge it is for the United States to get things balanced in terms of trade and deficits, trade deficits, that is. So I thought that was interesting. What else is happening out there? Well, we got the FOMC meeting. It starts tomorrow, and on Wednesday, it looks like the Fed is going to cut. What's going to be important to keep an eye on is what they say as well on Wednesday, whether they announce anything on QE. I think the economy is in bad shape. It's not a hot and great economy, as we're told, especially for the bottom, people at the bottom of the pile. And talking about people at the bottom of the pile, or the working class, if you want to call it that. I don't like using that term, but I was looking at some figures here, and silver, one of our favorite metals, of course. And back in 1964, which was the last year that U.S. coinage had, well, most U.S. coinage had 90% silver. The minimum wage was $1.25, so it was basically two of these, two $half, Kennedy $half, and a quarter, $1.25. It doesn't sound like much, does it? But if you go through the calculations, the amount of silver there is in here, you find that at the current price, let's see where we're now. Yeah, with silver around 58.36 on the spot price. Yes, this $1.25 in constitutional money, or 90% silver coinage, is worth $52.69. So that's what the minimum wage was, the equivalent of, or would be today, $52.69. So what is the minimum wage today? Well, it's $7.25. That's the federal minimum wage, of course. So yes, it's gone up 580%. But if Americans were earning in sound constitutional money still, I guess silver wouldn't be at $58, but they would be a lot better off, I would say. And I compared it to like senators and congressmen, representatives' salary. Their salaries have gone up 773% since 1964, while the minimum wage has gone up 580%. But more interestingly, the average CEO in the United States in 1964 earned 133,000, and now, as of last year, the average CEO earned almost $19 million, so an increase of 14,000%. So it just goes to show that fiat currency and inflation helps those who are at the top, who have assets, who deal in real things, right? Labor suffers massively. People who, provide the labor. And I think this is one of the huge problems we have, not just in the United States, but all around the world, especially in the West. I haven't done the calculation for the UK, but we didn't have a silver coinage in '64. You have to go back to 1946. So earning in silver, the American worker would be 4,215% better off. But yes, it goes to show as well that the government and the statistics, excuse me, they fudge things. They don't really give you the true picture of what's going on with the currency. And that's why silver is so important. I know there is a shortage and silver is very important as an industrial metal, but I also think it's a symptom and a reflection of a dying fiat dollar. And the higher the price of silver goes, the worse it's going to get in terms of purchasing power for the general public, especially the bottom 50%. And I think that's a huge problem for the Trump administration. It's a huge problem for the administration here in the UK, in Germany as well, where we're going to come to now. So I just wanted to put that out there. It's a really good exercise to do. All I did is measure the weight of these coins, timed it by 0.9 because they're 90% silver, and then divided by 31.1035, which is the amount of grams per troy ounce, and you get the figure of $52.69 an hour. I think in California the minimum wage is a bit higher. It's like $20, but that's still not much, really. People say that's a lot, but it's really nothing. So back to Germany, and yes, I have to thank the Gnome of Zurich, and yes, Karen, who runs the merchandise store for the channel, she designed a Gnome of Zurich mug, the Gnome of Zurich Keepers of Sound Money. And just wanted to let you know, of course, there's other merchandise there with Rudy and other things. We've got 10% off until the 15th of December. So if you want to get someone a Christmas, little Christmas present, that might be a good idea. We've got End the Fed mugs with quotes by Thomas Jefferson and Charles Lindbergh Sr. warning about the bankers, right? So anyway, the Gnome of Zurich called me this weekend and he said, "Did you see what happened in Germany?" I said, "No." Well, the government there had to, how can I say, give in to some of their coalition partners and agree to an increase in pensions, basically. And I found an article in the FT that's from December 5th, and it says German Parliament approves pension bill as Friedrich Merz quashes rebellion. That's the Chancellor of Germany, equivalent of a prime minister. And it says here, the pension bill is designed to guarantee statutory pension of 48% of previous income until 2031, a concession made by Merz to the SPD party. So it's going to add a lot of cost after 2031. And I think they increased by about 7% the amount that you get for your state pension once you stop working. So why is this important? Well, because it means more government spending. And as I said earlier, I worked in the futures and options market. And in particular, my business was to do with government bonds and German government bonds, or the Bund, the 10-year Bund future. Probably the contract I traded the most. It was it still is a big market. But I noticed as well there's a contract called the Boxel, which is the 30-year, and that was around when I was around, but it wasn't really traded that much. But the yields for the 30-year German government bond are now the highest since 2011, so almost 15-year highs. We're at 346, and I also noticed this morning, and I'm talking at 8 o'clock London time, 8 a.m., also noticed that the Japanese bond yields are not behaving, i.e. they're going up. And for those of you who don't know, when bond yields go up, it means that the price is dropping. People are selling the bonds, and that's not a good thing. It means governments are going to have more interest costs to pay. It's like a vicious circle. And also financial institutions and banks, they hold a lot of this rubbish, and government bonds are rubbish, right? They're based on empty fiat currency promises. Yeah, their balance sheets, their assets are gonna dwindle, and that's really bad as well. So yeah, the Japanese 10 years fast approaching 2%. We're up almost 3 basis points this morning. We're at 1.98%. And the 30-year, for example, is at 340. It's not at the highest level we've seen recently, but it's continuing to creep up. Germany, as I said earlier, was a really benchmark. It's still the benchmark government bond market for Europe. And the German government is the one that pays the least in interest. So every other country, the spread of their yields are compared to Germany, but it looks like Germany could be in trouble now. And when you have the second biggest and third biggest government bond markets looking shaky like this, it's very worrying for all the rest, even for U.S. Treasuries. This morning, the 10-year yield is unchanged, but it's still above 4%. It's at 4.15. The 30-year is almost approaching 4.80. And if you remember well, in September 2024, when the Fed first cut rates, it was a surprise. It was a 50 basis point cut. The 10-year yield was at 3.6%. So I actually wouldn't be surprised if the 10-year yield doesn't rise again on Wednesday after the Fed cuts. And why is that? If the Fed's cutting, well, they're cutting the target for short-term rates. And I think bond investors are concerned because you have a lot of fiscal profligacy, like in Japan, in Germany, in the UK, in the US, and you have central banks, still cutting rates while CPI is running hot. And you have to probably add at least 1% to the CPI numbers because they've all been fudged since COVID. And if you look at John Williams' shadowstats.com, his data, he looks at how the government used to look at CPI in 1980 or 1990. It's more like 6-10%. So this is not good, and we could have it's not out of the realms of possibility that we could have a major government bond crisis before Christmas even. I would say this could accelerate. Have to keep an eye on it. Right now it's still under control, but it's going the wrong way. So let's quickly look at where the markets are then this morning. It's 5 past 8 a.m. London time. We've got spot gold at 4,210. It's up about 12. We closed just below 4,200 on Friday. We had a bit of a sell-off late on in the day. Silver held up really well last week. It looks good. The gold-silver ratio is going the right way. Silver overnight, though, actually traded as low as 57.38, but it's rebounded, and we're now at 58.39, up about 5 cents. Not much, but it's pretty steady. High's been 58.86. And I think let's check what the all-time high was on Friday, because we did make an all-time high. I think on Friday it was at 59.33. So that's the key level there. And yes, I'm continue to hold on to my gold and silver. And I will also be trying to keep stacking, because there's only one thing the central bankers and governments can do, and that is to keep inflating. They have they're between a rock and a hard place, and that's normal if you've done your homework and you've studied history and what happens to fiat currencies. And government bond markets are the base; they are the other side of the currency, and that's why the trouble in the bond market is so important. What about the stock market? Well, it's pretty much unchanged. The Dow's up slightly. The NASDAQ 100 is up 1/3%, and the S&P is up 0.2. Currencies, they're pretty steady as well. Commodities, I've noticed that crude oil is trading back up above 60, WTI, just around 60. Notice copper is doing really well. And I think natural gas the other day as well jumped up quite a bit. Last Friday, but now it's come back down. So keep an eye on natural gas. And let's just quickly look at the UK government bond market, because it just opened a few minutes ago. Yes, and the selling in Germany and Japan is spilling over. The 10-year now is up 3 basis points at 450. So even if Rachel Reeves did a okay job of placating the bond vigilantes, she could still be in trouble, and it could come from abroad. It could be contagion from other government bond markets. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.